Good morning everyone and welcome along to the Fat Profits Research webinar for this Thursday, the 22nd of January. My name is Kai Lewis. I'm one of the equities analysts this morning, and joining us today will be David Lennox, the head of resources. I suppose the big news out recently was China and the economic growth. So a lot of news articles out there which have been talking about a hard landing that China was going to experience and that it was all over for China. We actually saw that the full year growth was 7.4%, which was up from the majority of forecasts. Us ourselves, we were expecting somewhere around the 7.3 to 7.4 mark, so very pleased to see it come in there. To talk more about that, we'll cross over to David.
Good morning, Kai, and good morning, members.
Okay, so Dave, the China story, I mean, we've been expecting that it wouldn't be as bad as a lot of the pundits had been saying. Obviously, growth is starting to slow from the previous years, but we're still pretty happy with 7.4, aren't we?
Oh yes, members, look, as you can see from the slide in front of you, China came out the other day and released its December quarter GDP numbers, and certainly they were a little bit of a surprise to the market, and fortunately on the positive side. The market was expecting a consensus of around 7.2 GDP growth annually for China to December, and it came in at 7.3. So we've certainly premised a lot of our forecasts through this year on the fact that we do believe that China will sustain a moderate economic landing, and in fact could perhaps later towards the end of 2015 actually show signs that it is perhaps returning to growth. But you can see from the slides there, members, that the market has been very concerned now for some years that China would experience a hard economic landing and that we would see economic growth collapse. We would suggest at this point in time, and that chart would tend to also support our view, that that's not going to happen, that we have actually been able to see the Chinese economy and its leaders actually engineer what we would call a soft economic landing. If you cast your mind back to 2008-9, when China was growing at a rapid rate, they were certainly levels of growth that were not sustainable. And of course, it would have, if sustained or kept going, it would have in due course led to probably what we would have seen at some point, a collapse far worse than we've perhaps seen at the moment. So look, overall, we were very pleased with that December number for China. We do think that it does support our view that China going through 2015 will play an important role in where the world economy is going, and we think it will be one of stability.